Committee on Banking, Housing, and Urban Affairs will come to order. Our witness is in person. Welcome, Mr. Chopra. The committee is in hybrid format. Some members might do this remotely. Let me start by talking about two of our colleagues who are retiring at the end of this Congress. Senator Toomey sat by my side, I by his side, for 87 of the 89 hearings this committee held this Congress. We each missed one. I think I was sick one day. He had a family issue. I mention that because it shows how seriously he takes this job, both as a senator and a ranking member, and I will always, always remember that and be grateful. I'm sure there were many hearings that he didn't want to sit through, but he did, and I give him credit for that. I've enjoyed getting to know him as we sat together and got to know each other better for the literally hundreds of hours over the last 2 years. We moved dozens of nominees through the committee. We worked together on crucial national security issues like China. Most recently, we've worked together on FTX, and off the committee worked on important maternal health issues. While we have our disagreements, there may be no other Republican as passionate as Senator Toomey, and it's backed by a strong worldview and intellect, especially on financial matters. He was a critical voice in our committee's response to COVID and the congressional oversight afterwards. The quality of debate and discourse in this committee was improved because Pat and his incisive intellect, I use that word again, were engaged. I also want to commend Pat's staff, Brad Grants, Dan Sullivan, John Cruz. Thank them, the rest of the team, for their hard work and diligence. I wish Chris and Pat and their 3 children the best in the next phase of Pat's career. I have not known a banking and housing committee without Senator Shelby. I came to the committee in 2007 in the middle of the financial crisis. He was then, and Senator Shelby points out that his first day on the committee, Senator Proxmire of Wisconsin, who was the predecessor to Senator Cole, was chairing this committee. He's helped shape the agenda for 35 years during Enron, during Sarbanes-Oxley, the Great Recession of '08, Dodd-Frank, the COVID pandemic, so many other critical moments in the history of this committee. He served in leadership roles as either chair or ranking member for more than a decade, working with senators as chair or ranking with Senators Sarbanes and Dodd and Johnson, and then finally me in his last 2 years as the leader of this committee. No one on the Republican side who is a greater proponent of strong capital at banks, something I always admired about Senator Shelby's philosophy and work. I wish you and Annette well in your retirement. Thank you. Welcome back, Director Chopra. The Banking, Housing, and Urban Affairs Committee used to be referred to simply as the Senate Banking Committee because it was mostly all about Wall Street. When Democrats took control 20 months ago, we changed that. So it's fitting that this committee's last hearing for the 117th Congress is CFPB's semi-annual report, because fighting for consumers is one of the most important things we do in this committee. Since CFPB first opened its doors 12 years ago, the consumer agency has returned about $15 billion with a B, $15,000 million to consumers, including principal reductions, canceled debt, and other relief. $14.9 billion. Over 183 million consumers have been eligible for relief. The CFPB has a track record of helping real people get real compensation for real harm from financial institutions that wronged them. 2012, just over a year after being fully operational, CFPB ordered American Express subsidiaries to refund $85 million to an estimated 250,000 customers for illegal credit card practices, including charging unlawful late fees. In 2014, CFPB reached a settlement requiring Sallie Mae to pay $60 million to an estimated 60,000 service members serving our country for overcharging them on student loans. In 2016, the CFPB fined Wells Fargo $100 million for opening unauthorized accounts and ordered West Wells to refund an estimated $2.5 million in fees accrued. This year, CFPB fined Bank of America $10 million for unlawfully garnishing consumer accounts. When financial institutions illegally took consumers' hard-earned money through unlawful late fees, through too high interest rates, through unauthorized fees, through improper garnishment, CFPB cracked down and ensured that consumers keep their hard-earned money. No other agency fights for consumers like CFPB. It's no wonder Wall Street hates this agency. Since the passage of Dodd-Frank, Wall Street and its allies have aimed their fire at CFPB, trying over and over again to undermine and gut the agency responsible for fighting for Main Street and consumers. Republicans have proposed bill after bill to weaken CFPB, to take away the effective single director structure, to put the agency's funding in the limbo of congressional appropriations, or to simply undo the CFPB. But Congress created it, specifically designed its funding structure to make the agency an effective consumer watchdog. According to the committee's report on Dodd-Frank, quote, the assurance of adequate funding, independent, my emphasis of the congressional appropriations process, is absolutely essential to the independent, again, that word, independent operations of any financial regulator, which is why other financial regulators, Federal Reserve, OCC, FDIC, NCUA, are independently funded and not subject to congressional appropriations. And when Wall Street and Republicans in Congress, always allies on these kinds of things, tried to put the CFPB out of business, the public loudly and clearly said no. So even in a unified, all-Republican President, House, Senate, they couldn't put it out of business. It's remained intact because it does its job helping consumers. Consumers know Wall Street doesn't have their interest at heart. Consumers know Wall Street needs a strong regulator. Consumers remember the damage that Wall Street wrought on the economy, on their neighborhoods, on their wallets. I live in Cleveland, Ohio. My zip code had the highest number of foreclosures in 2007 of any zip code in America. I know where that damage comes from. Consumers know that CFPB follows the facts. They go after bad actors, from banks overcharging customers to predatory payday lenders trapping consumers in debt. The CFPB stands up to Wall Street. Director Chopra and the CFPB use all their power to fight discrimination. They continue to go after financial institutions for their treatment of Black and brown consumers. 2021, CFPB required a bank to pay $5 million to address redlining that harmed Black consumers. This year, the agency announced it will re-examine whether discrimination violates Dodd-Frank prohibition against unfair, deceptive, and abusive acts and practices. And in July, in response to a local lender's failure to serve Philadelphia's majority minority neighborhoods, CFPB, along with DOJ's Combating Redlining Initiative, brought $18 million in funds to support homeownership in those neighborhoods. In total, CFPB has gotten $637 million from discriminating financial institutions, tens of millions of which have gone directly to minority consumers who experience that discrimination. There's a reason why the civil rights community was instrumental in the creation of Director Chopra's agency. They knew they needed an agency that was empowered and unafraid to fight against discrimination. It's creating a fair, transparent, and competitive economy. Major and consequential CFPB rules, like the ability to repay rule, not only provides protections for consumers buying homes, but also creates rules for financial institutions and the broader economy. That's why we created the CFPB, to ensure that the financial marketplace is fair for everyone, that corporations can't rig the system and get away with it. That is the essence of capitalism. Ranking Member Toomey.
Thank you, Mr. Chairman. Mr. Chairman, if it's okay with you, I would like to say a few words about my time serving here with you. I'd like to say a couple of words about my time with former Chairman Shelby, and then if I could yield to him for brief comments before I go into the opening comment about the subject at hand. Thank you very much. So first of all, thank you, Mr. Chairman, for the kind words that you said. The fact is, Chairman Brown and I actually have more in common than many people might think. We both represent big, complicated states. We both love baseball and politics, probably in that order. We actually get along quite well, despite the fact that we have diametrically opposed views of the world, and his are mistaken, but they are sincerely held. And I'd have to say I do really appreciate the really good, constructive working relationship that we've had. Sherrod Brown is honest, he's a straight shooter, and we have our disagreements. I think they have been cordial, and when it's been possible to find agreement, we have tried to do that, and I think we've had some success. I also want to personally thank your staff, the majority staff on the committee. These are very, very capable, smart, hardworking, and collegial folks, and I'm grateful to them for their hard work, as of course I am for my own staff. I think we've had a terrific team, and in these 2 years, they have done tremendous work, and I'll always be extremely grateful to them. And so my last wish is I wish you well, and 2 years from now, I wish you well as the ranking member of the committee.
Which would suggest you're supporting my reelection in 2024.
Well, that's an interesting inference. Let me say a couple of things about Senator Shelby. He and I also have some things in common, believe it or not, one of which is we both had the good sense to marry women who are smarter than we are. And that was the best decision I ever made. I think Richard probably feels the same way. But I am very grateful to him for the very, very long and very distinguished career that he's had. I understand that he has served on the Senate Banking Committee longer than any other human being in the history of the committee. He has served as its chairman. He's served as the ranking member. His accomplishments are too numerous to enumerate, but for me, he's been a role model and an example of how to be a really effective senator and a great representative for his state. Lastly, about Senator Shelby, I will always remember him as simply too big to fail. So, Senator Shelby.
Thank you. Chairman Brown, thank you first for your kind remarks. And also, I want to thank Senator Toomey. 36 years ago, it's hard to believe, 36 years, I came on this committee. I think I was sitting way down there, maybe on the other side of the TV, somewhere. And to get, I wanted to be recognized one time. Senator Proxmire was the chairman, and I had to ask 2 or 3 times before he even looked my way, And so we go through this. This is a great committee. It covers everything. It's essential. It's essential to our economy, everything that we do here. We do. It's also essential, SEC, what the SEC, what the chairman's coming for us today does, everything. But it's essential to free markets because it's the banking system, that we have, and we have. But 36 years, a long time, seems like yesterday. I've had the great privilege to, as Senator said, to be ranking 3 different Congresses and chairman three different Congresses. It's an awesome responsibility. I've served some good people on both sides of the aisle. I remember the late John Hines. He would have been chairman of this committee, but he had a big accident and lost his life, there. Senator Proxmire was, when I first came on, that the chairman mentioned. My gosh, he was a good chairman, good, tough, fair. Then Senator Regal, then Senator D'Amato, and Senator Graham, Phil Graham, and so forth. Senator Brown, Senator Sarbanes, we worked together like you two. We had our differences. We were good friends. We traveled together. We ate together. We did some good things together, we thought, for the American people. But I remember sitting here with so many smart, good people, both sides of the aisle, both sides. But I want to say, we've had, since I've been on the committee, smart staffers, good staffers. They flock to be on this committee from everywhere, on both sides, our staffs are working together. And I want to thank all of them for what they've done over the years. A lot of them have gone on, as you know, for bigger and greater things. But I'll always miss this committee. I've chaired 4 committees. This is a very interesting committee. That's why Senator Brown is chairman, and Senator Toomey would have been chairman. And so thank you for your kind remarks, and I'll miss you, but carry on. Thank you very much.
Thank you. Senator Toomey.
Thank you very much, Senator Shelby. So today's hearing, of course, is about the CFPB. It would be understandable if Director Chopra is pleased that it's the last time he'll be here dealing with me on this committee. So let me express my concerns. The last time Director Chopra testified, I did raise concerns about the CFPB's overreach in pursuit of a politicized agenda. And unfortunately, this behavior is nothing new for the CFPB. And under Director Chopra, my concern is it is more out of control than it's ever been. So I am disappointed, but not terribly surprised to note yet again that the CFPB has continued this pattern of overreach. In our constitutional system of checks and balances, only Congress has the power to appropriate money. James Madison called this, and I quote, the most complete and effectual weapon with which any constitution can arm the immediate representatives of the people," end quote. But the Dodd-Frank Act exempted the CFPB from appropriations. It empowers the CFPB to simply take funds from the Fed, which is itself also not subject to appropriation, thereby doubly insulating the CFPB from any congressional control. I acknowledge there are other financial regulators not on appropriations, and we can disagree about whether or not they also should be. But it's indisputable that Congress has precisely zero leverage over the CFPB. It's very hard for me to imagine that our founders intended an agency to have the power of the legislative branch and precisely zero accountability to the legislative branch. And in any case, clearly the CFPB is overreaching and doesn't seem to care about Congress's view. This is why the Fifth Circuit recently found the CFPB's funding structure is, in fact, unconstitutional. The court noted, and I quote, "The Bureau's perpetual insulation from Congress's appropriations power renders the Bureau no longer dependent and, as a result, no longer accountable to Congress and ultimately to the people," end quote. Well, what can we expect from an agency designed to be unaccountable to Congress, if not overreach? For example, under Director Chopra, the CFPB unilaterally decided that the Dodd-Frank's grant of authority to prevent unfair, deceptive, and abusive acts or practices, known as UDAP, now includes the controversial disparate impact liability. It announced this change by fiat, without rulemaking. It ignored not only the text of Dodd-Frank, but also the fact that Congress never contemplated that UDAP would encompass disparate impact. Congress took the UDAP language from the FTC Act. For nearly a century, the FTC never interpreted that language to include discrimination or disparate impact. Finally, the CFPB willfully ignored the fact that Congress overturned the CFPB's disparate impact guidance for auto lending in 2018. So it's extremely implausible to think that an agency that was dependent on Congress for appropriation would engage in activity so clearly contrary to Congress's intent. In addition, the CFPB has publicly targeted businesses for taking lawful actions, like its smear campaign against bank fees for overdraft services. By the way, this campaign will do nothing for consumers. It'll just cause banks to shift fees to less transparent means of recouping the costs of providing overdraft services. Now, this week, the CFPB has doubled down on its use of name and shame tactics with a new proposed rule. It would create a public database of enforcement orders, judgments, and settlements against non-bank financial institutions obtained by federal and state regulators and attorneys general, including under state consumer laws that are not applicable nationwide. Now, maintaining such a list may well make sense, but making it public is different and would create the false impression that the orders of the most activist states are the nationwide standard. What's more, the proposal would require a senior official of certain non-banks to attest to the CFPB that they're complying with these orders. That would effectively give the CFPB enforcement power over other agencies' orders for violations of state and federal laws. The CFPB has no jurisdiction to enforce this. And there's no limiting principle to stop the CFPB from extending this rule from non-banks to all financial institutions. These examples are just some of the symptoms of an agency that's out of control and knows that Congress can't do a thing about it. That's why I'm introducing legislation, along with Senator Hagerty, to place the CFPB on appropriations. The best way to make the CFPB accountable to Congress is through appropriations. Through its rulemaking, the CFPB can exercise legislative power, and it does. What's ambiguous about the first line in the first paragraph of the first article of the Constitution? It says, and I quote, "All legislative powers herein granted shall be vested in a Congress of the United States," end quote. At the very least, Congress should carry out the responsibility that the Constitution assigns to us and exercise control over agencies like the CFPB that exercise legislative power. That's not all our legislation will do. It will also replace the agency's single director with a 5-member bipartisan commission, like the SEC and the FDIC. This structure will ensure that the CFPB considers a diversity of voices when it forms policy. And it's not a new idea. Bipartisan legislation to convert the CFPB into a commission has been repeatedly introduced. These accountability measures will help make the agency more responsible, more balanced, and more measured, and Congress will have to accept the responsibility for what the CFPB does, as it should. What's more, if Congress does not put the CFPB on appropriations, the Supreme Court may very well do it for us. The court is expected to consider, and I think might very well uphold, the Fifth Circuit's decision that the CFPB's funding structure is in fact unconstitutional. If it does, I've no doubt Congress will act swiftly to provide the CFPB with appropriate funding. After all, Congress has plenty of experience at appropriations. But by acting now through legislation, Congress could ensure the smoothest possible transition. This is in the best interest not only of the CFPB and Congress, but also consumers and our economy. That's why I call on my colleagues, Democrats and Republicans, to join me in supporting this sensible reform. Thank you, Mr. Chairman.
Thank you, Ranking Member Toomey. I'll introduce today's witness, the Honorable Rohit Chopra, is Director of the Consumer Financial Protection Bureau. Director Chopra previously served as an Federal Trade Commission commissioner after the passage of Dodd-Frank. He joined the CFPB as Assistant Director and then was appointed by CFPB as the CFPB's Student Loan Ombudsman. He subsequently served as a Special Advisor at the Department of Education. Director Chopra, welcome, and please proceed.
Thank you so much, Chairman Brown, Ranking Member Toomey, and members of the committee. Our economy and our consumer finance markets are truly in transition out of a pandemic and further into a digital era. Given the economic uncertainties in today's markets, the CFPB is focused on monitoring these markets carefully to prevent the type of widespread harms that we saw in the financial crisis more than a decade ago. Over the last year, we've recovered hundreds of millions of dollars in victim redress and penalties. And in our enforcement program, we have sharpened our focus on repeat offenders to protect both consumers and law-abiding businesses. Congress has directed the CFPB to implement several rules, and we have prioritized getting these done. While we continue to address the challenges consumers face today, the CFPB is also preparing for the future. When companies can take on incumbents and when consumers can easily switch providers in a decentralized market structure, we are all better off. In October, the CFPB kicked off a rulemaking process under Section 1033 of the Consumer Financial Protection Act. The proposals under consideration would require that financial firms provide consumers access to their own financial data. Consumers would then be able to provide permissions to this data safely and securely to other financial firms. The CFPB is also focused on refinance markets, including in auto, credit card, and mortgage. And we've been making it a priority to identify ways to lower barriers to entry to small banks and small firms and to foster innovation that addresses important market gaps. We're taking a hard look at how big tech and other technology conglomerates are entering payments and consumer finance, and the threats they pose to relationship banking and free choice. Over the past year, we've had discussions with members from both chambers and on both sides of the aisle on reforms that can be advanced on a bipartisan basis. First, I'd really urge Congress to take action to protect our payment system. Facebook's Libra proposal in 2019 was a wake-up call to regulators around the world when it came to virtual currencies. There's now growing concern about how a small group of payment platforms, including Google, Apple, PayPal, Venmo, and others, are gaining a greater foothold in the payment system. Large tech firms are now the conduit for trillions of dollars in transactions, and the CFPB is conducting an ongoing study into how these companies are playing a role in the payment system. The rise and dominance of a small group of these firms raises questions about how they can suppress, suspend, or even discriminate against some users over others. The CFPB has heard considerable concern about payment apps kicking off users or even fining users for their speech. And we've also heard concerns from dominant firms abusing their positions to hike fees on small banks, merchants, and consumers. Our nation's payment system serves as core economic plumbing that should be non-discriminatory and neutral. Second, Congress needs to do more to strengthen financial privacy protections. More than 20 years ago, Senator Shelby and others on this committee began raising concerns about the creation of behavioral profiles using our credit and debit card data. Today, with the rise of tech platforms and e-commerce that monetize user behavior with lots of data, these concerns are even more acute. I worry that the notice-based privacy regime of the Gramm-Leach-Bliley Act is ineffective in the modern world. Privacy policies for financial services are often all or nothing, and consumers must choose to accept the company's terms wholesale or decline to use the product altogether. So while Congress is looking at privacy protections across all sectors of the economy, I hope you'll also consider looking at the Gramm-Leach-Bliley Act to provide limitations on the collection, use, and sharing of personal financial data. There are a number of other opportunities for bipartisan efforts, and the CFPB is eager to work with this committee on these and many other issues. Thank you again for the opportunity to appear before you. I look forward to your questions.
Director, thank you, and good to see you again. Protecting Americans from harmful medical debt, as you point out, and as your predecessors also pointed out, as a priority for this committee and for the CFPB. Earlier this year, Experian and Equifax and TransUnion announced they'd no longer include some forms of medical debt on consumer credit reports. But according to a recent report that your office released, it sounds like the changes announced by industry won't be as meaningful, make as meaningful a difference as we had expected going in. Your report said, quote, in terms of dollar amount, a large majority of reported medical collections likely will still remain. My question is, your report clearly indicates the changes on how medical debt is reported are not enough. How do we make sure that medical debt on credit reports is not crippling far too many Ohio, Pennsylvania, and American families?
Well, medical debt is one of the top items now in terms of collections on consumer credit reports, and it is a major challenge when it comes to accuracy. You know, oftentimes providers, patients, and insurance companies are going round and round. And in many cases, consumers are being asked to pay something they already paid or never owed in the first place. So we have to make sure that credit reports are not a tool to coerce someone into paying something that they don't owe. Accuracy issues in credit reporting are very, very acute in medical debt. We're going to continue to look at ways to make sure that medical debt does not, especially when it's inaccurately reported, does not really harm a person's ability to participate in the economy.
Thank you. Good, important answer. To ensure consumers keep their money where it belongs in their purses and their wallets, the CFPB issued guidance advising financial institutions that any that surprise overdraft fees may be unfair and unlawful. How are consumers being harmed by surprised overdraft fees?
Well, sometimes a consumer might expect just one overdraft fee, and then they see they get 3 or 4, even when their balance showed that they had enough money in their account. This is the type of overdraft practice where on the back end, there can be not just mischief, but illegal practices. We have taken action. Other regulators have done so as well. And in some cases, institutions have ignored repeated warnings and decided to do it anyway. And we are committed to holding them accountable.
Did industry request additional guidelines on this matter?
Industry is actually always looking for more information and more clarity. It's one of the reasons why the CFPB has published so many advisory opinions and other interpretations. We've continued the practice from my predecessor, Director Kraninger, on the advisory opinion program, and we'll continue to do so. Of course, guidance does not create any new legal requirements, but it seeks to provide transparency on obligations under existing law.
And it speaks to, you are criticized, as you know, by a number of particularly conservative lawmakers and interest groups, but it does point to how you have tried to build as cooperative relationship with people as you possibly can. And I think on that it shows.
Yeah, I think there has been sometimes the term regulation by enforcement. And of course, we have to enforce existing law, but where we can provide more information about what law-abiding businesses are trying to make good faith efforts to comply, we're going to do that. They might not always like what existing laws require of them, but of course, that's one of the best ways we seek to also protect law-abiding businesses and help them.
Thank you. One last question. Some 50 years after passing the Fair Housing Act, 40 years after fair lending laws, we know that redlining still exists in our housing system. In July, CFPB helped identify one lender in Philadelphia that, through its office locations, through its lending, and through the racist language of its employees, showed a clear pattern of discrimination. Because of CFPB's actions, more borrowers in communities of color will have access to a mortgage. So my question is, how's CFPB working with DOJ and other agencies to make sure everyone has equal access to mortgage credit?
Well, one of the great things about that action in Philadelphia was that it was not just the CFPB, but also the 3 state attorneys general of the Philadelphia metropolitan area also participated because their counties were impacted too. The Department of Justice and the Attorney General of the United States have a redlining initiative, and we're not just looking at traditional forms of redlining, but also digital redlining as well. And there's much more work to do there.
Thank you. Senator Toomey.
Thank you, Mr. Chairman. Director Chopra, when you came before this committee for your nomination hearing, you said that you preferred that the CFPB not be on appropriations because you believed that independent agencies are able to stay more clear of political influence. Do you stand by that opinion?
I do.
Okay. Here's a problem. Under your tenure at the CFPB, it's become as politicized and as far left as I've seen any federal agency ever. It seems the only political influence the CFPB is not subject to is the influence of the elected representatives of the American people, which is sometimes known as democracy. Now, some have suggested that the CFPB is accountable because you were confirmed several years ago, and because you have to come up here twice a year and answer or not answer questions from my colleagues and me. But let's be honest about the reality here. We're going to raise a lot of concerns today. And at the end of the hearing, you're going to leave. And if you want to, you can choose to just ignore everything that is said here at this podium, and there's nothing anybody here can do about it. I would remind my colleagues, the Fifth Circuit Court has recognized this lack of accountability to be unconstitutional. There's a very good chance the Supreme Court will as well. And that's why I think it'd be a good idea to begin discussions now about legislation that would remedy this. Quick, I think this is a yes or no question also, Mr. Chopra. Do you believe that Congress should change the CFPB's governance structure to that of a multi-member commission?
Well, that's really Congress's decision.
I get that. You're correct, 100%. It is Congress's decision. But would you recommend it to Congress?
Well, my own experience having served on both a multi-member and a single director, there are pros and cons of each. I think there's more accountability with a single director. With a commission, you can point the fingers at others when something doesn't get done. I saw it myself.
I'm about to run out of time. I get it. But the suggestion that there's accountability, I'm sorry, that is hard to take seriously. There's no accountability here. And at least if there were a commission, there would be multiple voices. There would be different points of view. There would have to be a vote to advance various proposals. I think that would make a lot of sense.
Well, Senator Toomey, I think we take all of the congressional oversight very, very seriously. In fact, a lot of what we have done just in the past year is truly in response to some of the things that you have shared as issues with the CFPB, as well as your colleagues. We also think that for the long term, there are so many issues that we ultimately have to do together, and we try our best to be responsive to all of that. In fact, Congress has passed laws.
I'm going to run out of time here. I understand. I have no doubt that that is your impression, but I know that you're aware that impression is not shared by most senators on my side of the aisle. So there's a difference of opinion there. Let me ask you a couple of questions about the new rule that you proposed this week. And let me start with a hypothetical. Let's say the California Department of Financial Protection agrees to a consent order to settle an enforcement action that it brought against a non-bank lender for violating state consumer law. And in this case, the CFPB isn't involved in the case in any manner whatsoever. It seems clear to me that the CFPB has no authority to enforce California's consent order. But under the rule you proposed this week, the non-bank would have to report the consent order to the CFPB to be included in a new public database, and a senior executive of this non-bank would have to attest as to whether or not their institution was complying with this order. Now, here's my question. What would you do if this non-bank said it was compliant with the order, but you disagreed?
So as a factual matter, what you're saying is not exactly accurate. It's for certain supervised entities that attestation would be required. So this is a proposed rule, And what I'd share is that in the proposal, we outline what are the consumer laws that in some ways are derivatives of similar unfair, deceptive, or other consumer financial laws. So generally speaking, this is really for states and all of us to coordinate. Often you have an entity that violates the law in one state and picks up and moves to someplace else. This helps everyone coordinate and detect fraudsters, which often
okay.
rip off people all across the country.
My concern is this could be used as a hook to give the CFPB leverage to enforce other agencies' state consent orders.
Well,
And that is
generally,
not the authority.
violations of law at some of these state consumer laws sometimes are often federal law violations, but I hear what you're saying, and we will take the comments in the record very seriously.
Well, that's a real concern that I have. I'm also concerned about, and I know I'm out of time, but let me just make my point here, Mr. Chairman, and that is that the CFPB is, in fact, implementing a disparate impact standard without using that phrase. And I worry that the effect of that is the possibility that the CFPB would not feel obligated to observe the guardrails that the Supreme Court has imposed on the application of disparate impact.
May I respond, Mr. Chairman? I think that is not accurate. If you look carefully at the unfairness language in the statute that was codified by Congress in 1994 in the FTC Act and repeated in the Consumer Financial Act in 2010, that is not about disparate impact. It is about injury, reasonable avoidability, and countervailing benefits. I'm happy to talk with you more about that, Senator Toomey, but I just totally disagree.
Well, I know you do, but in your press releases and in the exam manual, you refer to the UDAP authority providing the prohibition on unfair practices and that it does not require an element of intent. This starts to sound a lot like the definition of disparate impact without using the phrase disparate impact. And what concerns me is the application of disparate impact is constrained by the Supreme Court, and you should follow that constraint if you were to be implementing. And finally, UDAP's a longstanding concept, in fact, codified, and for 100 years, nobody discovered that disparate impact was somehow embedded, but
I think that
CFPB
reflects a fundamental misunderstanding of unfairness, what Congress codified in 1994. And again, I'm happy to speak to you about it after this.
Thank you, Mr. Chairman.
Thanks, Senator Toomey. Senator Reed of Rhode Island is recognized.
Well, first, let me begin by saluting Senator Toomey for his service and dedication, his thoughtful and professionalism. We have a major event in common. We both went to the same high school, LaSalle Academy in Providence, Rhode Island. What I don't even have in common with Senator Toomey is I was not first in the class, and I was not accepted at Harvard College. So you've got a couple things up on me, Patrick. Let me also say to Senator Shelby, congratulations for your service. I arrived here 25 years ago, and he was a leader then, and he's a leader now, and an extraordinary gentleman. And now let me turn to the director. First, a question that's come to mind as I've listened to the discussion. The decision by the Fifth Circuit, also calls into question the validity of the Federal Reserve. Is that correct?
Well, the CFPB's funding is the same funding as the Federal Reserve System. So I think, yes, it certainly does. And that is part of what the Solicitor General, in her petition for cert to the Supreme Court, has articulated.
So we should really start warning Wall Street right now that and get their reaction to a Federal Reserve that is subject to congressional appropriations. And by the way, we're trying to get that wrapped up a few months later than normal. But I think that's something that should be at least on the table and considered. But let me direct my major attention to the Military Lending Act, because I was helpful in getting it passed. Can you tell us, or give us an update on what you've done this year with supervision and enforcement of the Military Lending Act?
Yes, so we've actually taken a number of actions, including against repeat offenders of the Military Lending Act. We've sued First Cash, the nation's largest pawn lender. We've taken action in a number of other places, including Moneyline Technologies a few months ago. Let me say pretty straightforwardly that when this law is not adequately enforced, the effects on the force are real. People can lose their security clearances. They can face their own financial distress for them and their families. So we are very committed to fully prosecuting this law and being very clear about our expectations.
Let me shift to another piece of legislation. That's the Service Member Civil Relief Act. When I was in the service, it was called the Soldiers and Sailors Civil Relief Act. But it provides, among other things, a maximum interest rate of 6%. And last week, I believe CFPB published some research findings. Can you provide us some details about?
Yeah, so what we identified is for service members' pre-service obligations, they're entitled to a 6% rate cap to ensure that, especially if they're activated guard or reserve, that, their financial life doesn't move into disarray. So we identified that there are millions of dollars in extra interest that is being, that service members are paying when they're activated. And we're particularly worried about the guard and the reserve. I'll also say as interest rates in the economy go up, that's bigger money when it comes to activations and what happens to those families.
Well, thank you, because I think you've made the point quite clearly that this is not just an issue of financial transactions, it's an issue of military readiness and the impact on families and individual service members. Let me shift gears again to buy now, pay later phenomenon, which is going on. It's getting more and more popular. Are these loans, buy now, pay later, being structured to avoid the Military Lending Act? Have you found any?
So I don't want to say that it's intentionally done a certain way, but certainly the applicability of the Military Lending Act gets trickier when it comes to buy now, pay later. One of the things that we've been working with buy now, pay later firms on is how can they also get credibility and certainty in the market and make sure that, if it's a substitute for credit cards, how might we make sure that disclosures and other protections are equivalent? I think we've seen what happens when there's no credibility in a product and it can be chaotic. I think buy now, pay later is going to continue to be a major way people borrow. And I think it's important we continue to think about the service member and military protections in that.
Thank you very much, Mr. Director, and keep up your good work. Thank you.
Thanks, Senator Reed. Senator Tester of Montana is recognized.
Yeah, thank you, Mr. Chairman. And before I get to Mr. Chopra, which I appreciate being here today, I also want to say thank you to Patrick Toomey. I remember the first time we worked on a bill and we were in the dining room over at the Capitol, and I said, you're not nearly as crazy as the scouting report indicates you are. And I think you said something like, you want to keep that perception. So I appreciate everything that you've done. And even though it has ruined my career calling you a smart dude, I do want to say that it has been good to work with you. And in honor of Shelby, I'll just let you know I have my Roll Tide coffee cup, so it's all good. Look, Rohit, you and I have discussed the importance of making sure that we're holding big tech companies accountable for how they're using consumers' data, especially when they're providing services like those that local bank and other regulated financial institutions traditionally provide. So what are you seeing at the CFPB around big tech companies and where they may be trying to skirt the law?
Well, I think what we're seeing is that big tech firms payment system, and they're collecting an extraordinary amount of very detailed and personal information. We also know that some of the other big financial players are getting into data assets that small banks would never really even get near. And I think we have to address that together.
So how will the CFPB standards that regulated financial institutions meet so that consumers are protected?
Well, Senator Toomey raised the issue of non-bank registration. They're subject to supervision And one of the big things they ask for is for the CFPB is to make sure there's a level playing field. So we have focused much of our supervisory attention on these non-banks who are not subject to the same oversight as.
Senator Reid asked about the Military Lending Act. Veterans and their families, what kind of risks are you seeing as from your chair?
So generally, I think veterans right now, how long they've been out of service. We have very serious issues with economic instability among our veterans in our country. Many have a whole set of issues with housing and credit and debt. Financial issues are a major driver of challenges. So, of course, the military typically don't apply to those out of service. In particular, we see medical debt being pretty severe. We work how the VA's own medical debt programs can be fair and not be overly punitive and to really help veterans get through things. So we have a lot that the challenge may be growing.
Is there anything Congress needs to be doing?
Well, I think as it relates to veterans and credit and debt, especially medical, I hate to see when veterans are not able to get through a tenant screening. I hate to see when they can't pass an employment verification check because of coding issues in their background. So and especially that we can tangibly focus on fixing. Of course, I also want to make sure that if there is changes in the mortgage markets and housing prices, veterans be subject to unlawful foreclosures. The VA and its mortgage program play a huge role in making sure that those veterans can get loan modifications, that they're not subject to churning. And so housing is going to be a big piece when it comes to the veterans mortgage market.
Just very quickly, in contact with the VA on these issues on a regular basis?
We do. I would say the secretary himself is also very supportive of thinking about financial issues that our veterans are facing. With them and you on that.
Thank you. Thank you, Mr. Chairman.
Thanks, Senator Tester. Senator Haggerty, and I apologize. I didn't see you come in, and I should have called on you before Senator Tester. So thank you for joining us.
No worries, Mr. Chairman. Comments. And Chairman Chopra, good to see you here today. I really wanted to direct my comments, Mr. Chairman, toward our ranking member today, if that might be okay. I have not known you long. I have a soft place in my heart for you. Someone who was a derivatives trader at Chemical Bank and Morgan Grenfell. Your knowledge and depth of experience in the experiences here in Washington, I feel have left an indelible mark. And if I think about how you've been a leading voice and really a staunch advocate for conservative You've helped us navigate through some very uncertain times, particularly these past 2 years as we've come into a recession. We've seen inflation like we've never seen, challenges to the economy that have been You've been very strong in terms of making certain that the policies that come from this committee will have long-term and enduring benefits for hardworking Americans, for job creators, and for our competitors. You greatly. And on a personal level, I'd just like to say this from my wife, Chrissy, and our kids. We've enjoyed getting to know Chris. Patrick, Bridget, and Duncan are just treasures for children, and I think they are very happy you're coming home, I'm sure. And we're all looking forward to where your career may take you next. Thank you for your wonderful service. Thank you, Mr. Chairman.
Mr. Chairman. And the respect and admiration is mutual.
And Senator Haggard, you have a couple minutes left if you'd like to do a question or two.
I yield my time back. Thank you.
Thank you.
We haven't always agreed, but I've always known where you stood and your views and the way in which you pursue it, and we've enjoyed our relationship on behalf of the CFPB doing to ensure that Mohila provides an acceptable level of customer service to borrowers?
Well, I can't comment on a specific supervisor. To do so with simple.
Well, I'd urge you to be robust about it because the consequence to consumers
Is enormous.
Is enormous. A 2021 report by the Financial Health Network found that nearly 60% of all overdraft fees in 2020 were paid by low and moderate income households, and about 25% were paid by Latino households specifically. According to the CFPB, the banks made $15 billion a year in overdraft and non-sufficient funds. To put that into context, the banks altogether made $71.7 billion in the third quarter of 2022. Do overdraft fees appear to be a major source of revenue for banks?
So they certainly have been. What we are seeing, though, is a shift in the market where they're finally starting to compete. And some banks are drastically reducing them, eliminating them. And a key consumer problem is sometimes a consumer expects one overdraft fee, but they get hit with a ton of bricks and 3 fees, even though when they looked in their balance, they had enough money. We are trying to take action to go after illegal overdraft practices to make sure that these are not an unnecessary financial hardship and that there's compliance with the law.
Yeah, it seems to me that these institutions would be well successful in terms of their financial wherewithal without these fees, and they particularly affect the most significant in our society who are already at a disadvantage. So I urge your continued engagement on this and appreciate it. I continue to hear story after story from New Jersey constituents who have fallen victim to scams and fraud on Zelle, and in many instances been denied relief by their banks. I understand that the big banks that own Zelle are considering a plan to require the network members to compensate victims of certain kinds of scams. That would be CFPB was working on guidance regarding liability for Zelle scams. Has that work progressed? Where are we at with it?
Well, we have been talking to banks, small banks and big ones, about how to reduce the scourge of fraud in real-time payments. This is not just about Zelle, it's also about other P2P apps. Some small banks who aren't part of the ownership structure of Zelle and others too can set up frameworks that actually reduce the total amount of fraud when it comes to P2P apps and bank-owned solutions.
Well, I appreciate that. I know that Senator Reid to continue to be engaged in this space, and it's incredibly important. And Mr. Chair, if I have one more minute, I just want to note the bipartisan work we did here in Congress to shepherd the Debt Bondage Repair Act into law. That bill was led by ranking in the Senate, and certainly I helped make it happen. This helps the survivors of human trafficking negative marks associated with their abuse from credit reports. In June, you issued a final rule to implement the legislation, and I want to thank you. I think we should all be reminded of the scourge of human trafficking, and in this case, how we can provide some relief to the victims.
I have similar concerns about impacts on victims of domestic violence and how credit reporting can be used as a weapon. We're trying to think about all the ways in which all of your work on human trafficking, one of the many times that Congress has passed a law and the CFPB has faithfully implemented it. Every time Congress and is accountable for it.
One of the many reasons we need a CFPB. Thank you very much.
Next one is Senator Scott of South Carolina.
Thank you, Chairman Brown. I wanted to stop by as well to pay my regards to Ranking Member Toomey, as well as to former Chairman Shelby. We certainly will miss his service from the great state of Alabama, but Pat has been a great friend of mine and certainly a mentor as it relates to the Banking Committee and all things financial. I will never forget our work on the TCJA and the hours upon hours that we spent trying to figure out how to make America healthier financially and to grow our economy, to focus on making sure that this great land of opportunity, the United States, was open and accessible from a financial perspective. Arrived in the 114th Congress is going to be sorely missed. I know that this is not the end. It's just a new chapter opening up for you, but we certainly will. The work that you've started on this committee to make sure that this incredible country works for every single American and that we continue to look for ways to strengthen our. We'll sure hear from you hopefully often, and we'll stay in touch. But I thank you for your years of service to this committee and frankly your left or the right, but on the American people.
Mr. Chairman, if I could take just a moment to say a big thank you to Senator Scott, a great friend and a great American. Your service to the state of South Carolina has been tremendous. Your contribution to the Republican conference has been tremendous, and you have an unlimited future in front of you that I'll be very eagerly watching.
I have had the good fortune of being the ranking member on the Aging Committee this year, and the committee has been meeting at the exact same time as the banking committee. So I can't think of a better place to serve right now than the aging committee, perhaps the banking committee. And look forward to coming back over here. So it's been a blessing to be there, and unfortunately, I've missed a lot over here, but we'll be here next year. Thank you. No, sir.
Senator Warren of Massachusetts is recognized.
Thank you, Mr. Chairman. Actually, I want to add my thanks as well to Senator Toomey. I want to say thank you for your many years of public service and how well you have served the people of Pennsylvania and the people of the United States. I also want to say thank you for your willingness to work across the aisle. We don't see eye to eye on every issue. In fact, very few. But where we can, we do, and I appreciate that. So let's talk about CFPB. You know, big businesses and their lobbyists have spent the last decade trying their hardest to take down the CFPB. And throughout it all, the CFPB has done its job, holding banks and giant corporations accountable. So it is no wonder that the Chamber of Commerce and its corporate clients have now launched a new campaign, spending hundreds of thousands of dollars to attack the CFPB and to attack you, Director Chopra. And that is on top of the many millions of dollars it has already spent fighting for giant banks and corporations in their right to cheat, trick, and discriminate against consumers. So I just want to talk about a few of the things that CFPB does that big banks you did when you took over the CFPB was to launch an initiative against junk fees. You know, the couple of dollars here and a couple of dollars loading on families in order to boost corporate profits. We're talking about things like way high overdraft fees, hotel resort fees, other random fees that people can't usually see until it's too late. Now, the Bureau recently issued guidance to. I just want to ask you, how much do you think consumers will be able to save if you can get rid of these fees in their lives?
On surprise overdraft fees, there's about $1 billion that has already been cut out. And when it comes to others in the market, $3 billion in overdraft fees. Say this, if you believe in a market system where people can compete with each other, when you hide fees or jam, not really a market system to me.
That's right. All right. So when financial institutions insist on continuing to you've been successful. Bank, for example, was found to have charged surprise overdraft fees to its customers. So how much money did CFPB recover for cheated consumers once it took on Regions Bank?
So just in that one, we got $141 million in victim restitution and then a $50 million civil penalty.
Okay.
It's a repeat offender, so we had to take it seriously.
Yeah, and that's money that stays in people's pockets because of your work. So let me turn to another example. The CFPB has also been working to protect student loan borrowers. You identified student loan servicers engaging in deceptive practices, in tricking teachers and firefighters and nurses out of the opportunity to access loan forgiveness under the Public Service Loan Forgiveness Program. Director Chopra, is the CFPB action going to put money back in the pockets of public service like nurses and firefighters and teachers?
Yes, they will have, in many cases, their financial.
All right, so let's take a look then at housing. The CFPB has been looking into shoddy tenant screening services that too often result in denied rental housing. Earlier this year, the Bureau issued guidance warning tenant screening companies to clean up their practices, help reduce barriers to affordable quality housing.
Yes, and it will also be good for landlords too, who want to be able to find a tenant that works for them and not.
So once again, making markets work better just making them work for consumers as well. I'm going to do one more quick example here. Many people pay that tarnish their credit ratings. So in March, the CFPB issued a report. And here's what I love. A rule around this. A few weeks later, the three big credit reporting agencies announced they would eliminate nearly 70% of. How many families will this change impact?
Millions, I think. Inaccurate credit reporting, especially on medical debt, can be a blockade.
The CFPB is saving tens of millions of families a lot of money. I know that big banks and their lobbyists may hate that, but I am glad American families have a cop on the beat who's working for them. Thank you. Thank you, Mr. Chairman.
Thanks, sir.
Remarks and have a few questions. I too want to recognize Ranking Member Toomey. I remember my days at Procter & Gamble. One of my early mentors told me, when you hire, you look for people that can check three boxes: integrity, intelligence, and initiative. Everything else you can coach, but you got to have those three fundamental attributes. Senator Toomey, you have truly modeled that for me personally, as you have served the United States Senate, as you have led so well as a ranking member on this committee. You'll be dearly missed. Thank you for your sacrifices. Echo Senator Scott's comments. I'll never forget the work we did together on the tax cut bill and cutting taxes for small businesses. A moment that we did a big thing together, and thank you for that. In a petition to the Supreme Court on November 14th, the CFPB asked the court to reverse the Fifth Circuit Court of Appeals ruling that determined that CFPB's unprecedented power to fund itself was unconstitutional. The petition claims that the CFPB's funding is constitutional because Dodd-Frank authorized the CFPB director to unilaterally decide how large its budget can be and mandates that Federal Reserve transfer the requested funds. However, the Constitution prohibits federal agencies such as the CFPB from spending federal treasury without, quote, appropriations made by law, end quote. In its decision, the Fifth Circuit writes that an expansive agency insulated from Congress's purse strings, expressly exempt from budgetary review, and headed by a single director removable at the president's pleasure is the epitome of the unification of the purse and the sword of the executive. I believe it's highly likely that the Supreme Court ultimately reviews this case and upholds the Fifth Circuit decision. My Republican colleagues and I have continually asked for our colleagues on the other side of the aisle to join us in reforming the CFPB. That offer sincerely remains on the table. And now turning to my questions. Director Chopra, during your last appearance before the committee, you stated, following a question of mine, that, quote, consumers benefit from a transparent and competitive market. A transparent and competitive market will help develop lower cost, small dollar loan products, end quote. Director Chopra, under your leadership, what steps has the Bureau taken to create an open and competitive market for consumers to ensure continued access to small dollar loan and financing products?
That's a great question. So two things that come to mind. One is that we have really put an effort to make sure that our credit card market is extremely vibrant. Credit cards are the biggest source of small dollar loans in America. It's a place where so many people are able to afford things, even if they may not have the liquidity. We're looking at ways for small banks and credit unions to be able to play a bigger role in the credit card market, to be able to help refinance credit card debt, and much more. We've also proposed implementing a long dormant authority called Section 1033. This is how fintechs, non-banks, and small banks may be able to access customers at lower customer acquisition costs by allowing permission data. So you would be able to move your data and use it as a way to be underwritten potentially for lower cost credit elsewhere. So I really see that technology, we can harness it in a way that creates more opportunities for new entrants, more opportunities for small players, because right now, small dollar lending and credit cards, it's dominated by just a handful of the largest. The truth is local banks would be very good at serving people in that market, and we're looking for more ways to support them doing that as well.
Thanks, Dr. Chopra. I want to go to another lane here, and that's about abusive practices. In late September, the U.S. Chamber of Commerce filed a lawsuit challenging the legality of CFPB's changes to the Unfair, Deceptive, or Abusive Acts or Practices, UDAP, exam manual. While lawmakers such as myself and many here expect the CFPB to enforce legislation that protects consumers against discrimination, it seems as though the Bureau has unilaterally decided, without congressional oversight, that UDAP now includes disparate impact liability. In the 12 years since Dodd-Frank was enacted, neither Congress nor the CFPB has claimed that the legislation authorizes disparate impact under UDAP. Unfortunately, instead of implementing these changes in an open and very transparent rulemaking process, your Bureau simply issued a press release announcing a very controversial change. Back in 2018, the CFPB disparate impact guidance for auto lending was overturned by Congress after the Bureau's enforcement methodologies were found to be flawed and, importantly, not authorized by statute. Now it appears as if your Bureau is attempting to implement disparate impact guidance, not just for lenders, but for all consumer financial products and services, and we're hearing a lot about that. Putting aside whether this tactic is legal or not, which I do not believe it is, do you think the CFPB's implementation of disparate impact guidance through a press release without congressional authorization or a notice and comment rulemaking is a transparent way to make policy changes?
So I appreciate the question, Senator Daines. So this is not a disparate impact. Senator Toomey has claimed this many times, and it's just not true. I'm happy to talk you through the legal details of it, but I want to answer the question you've really posed at the end, which is about transparency. One of the things that Senator Toomey and others have really expressed is that they worry about regulation by enforcement, a sense that firms should know what's obligated of them under existing law. So one of the things we've done is we've tried our best to find lots of different ways to issue guidance that doesn't have the force of law, but it gives entities a sense of what does the current law require. In the case you mentioned of the exam manual, that's really also about consistent examination. The manual is guidance for examiners that when they are investigating potential discriminatory or other unlawful conduct, how might it implicate some of the existing laws that Congress has authorized and prohibited? In many situations, illegal conduct can violate multiple laws, but I want to figure out, and I'm happy to work with you to figure out, what is the way to be transparent, but also, how to best.
I'm way over time. One last sentence. I appreciate you expressing interest in supporting community banks, smaller banks, and competition. I think it's important you get the feedback early in that rulemaking process from all entities, including these smaller banks, community banks. Thank you. Mr. Chairman, thanks for your patience.
I'm Senator Smith. Thank you. Thank you, Chair Brown. Senator Toomey, Pat, we wish you the best in whatever adventures you have before you. I'm sure they'll be exciting, and thank you for your service. to Pennsylvania and to the United States of America through the Senate. So we wish you the very best.
Thank you very much, Senator Smith.
Thank you. So, Director Chopra, thank you so much for being with us, and I appreciate your testimony and your answers to the questions today. You know, markets need to work for consumers as well as the private sector businesses that serve those consumers. It needs to be fair and transparent so that people aren't taken advantage of. And I want to thank you for the work that you and CFPB do to make that value real. And it does seem like there are new scams that hop up constantly. Here's an example that I want to ask you about. In November, ProPublica and the Sahan Journal co-published a story describing practices targeting the Somali community in Minnesota. So real estate investors are apparently pitching contracts for deed, sometimes known as land contracts or seller financing, as an interest-free way of purchasing a home. And this is, of course, particularly attractive to Somali buyers, many of whom have religious tenets forbidding paying interest. Under these arrangements, a buyer pays a seller directly in installments, and there is no mortgage or bank. And there are also very few consumer protections for buyers, and the contracts are also often structured to contain large, unmanageable balloon payments. And so what happens? Families end up defaulting on their mortgages and are at risk of losing their homes. And the stories are really terrible when you read them. So I want to just ask if you're aware of this issue, have you heard about this, and what could you do in response to these practices to protect these consumers?
Well, I saw this report, and one of the things that I think I've shared with some of you before is this issue of exploiting religious beliefs.
Yes.
I think is very pernicious. And I think the extent to which, I don't know all the facts to see if it violates the law, it certainly raises red flags when there may be deception or, frankly, taking someone's home without the appropriate safeguards in place. I want to make sure that the CFPB is not in the business of projecting the future of, the economy, but we are always paranoid about what could come. And I think housing insecurity and evictions and all of the associated rules, we need to make sure that we can stop some of these before they really go nationwide.
Exactly, before they take off. And that's my concern too, that what's happening here is people, bad actors exploiting this prohibition amongst Muslim folks to not pay interest and then taking advantage of them. Similarly, I'm also concerned about recent reports about a new deceptive practice that seems specifically designed to deceive homeowners. This is about basically it's related to contracts for providing upfront cash to homeowners in exchange for an exclusive right by a real estate firm to serve as their listing agent for out to 40 years. And so this upfront cash is described as a loan alternative, and the only way that a homeowner can exit this arrangement is to pay 3% of the home value back to the realtor, the company, and then that's enforced as a lien against the property. It's just another example of the ways, just as you say, the way that this huge challenge that we have around housing in our country is being taken advantage of, it appears, by these bad actors.
And I also, in that situation, particularly worry about older homeowners who are often sitting in homes they've lived in for a long time.
Right.
And often that's their core source of wealth and their ability to finance their retirement. I will say on this issue, we've seen the Florida AG, we've seen other AGs take actions. Sometimes it implicates our authorities, other times it does not. But that's part of the reason we want more state AG and state regulator coordination with us, because often if it doesn't trip our laws, it may trip theirs. And that's why we've really put a premium on investing in those state AGs. And I want to commend your state for really being part of that work.
Yes, our Attorney General does excellent work and keeps consumer protection at the forefront of his efforts, so I appreciate that. Thank you, Mr. Chair.
Thank you, Senator Smith, the senator from Nevada. is recognized.
Thank you, Mr. Chair, and Ranking Member Toomey. Again, as I said yesterday in the banking hearing, I just wish you all the best, and it has been a pleasure to know you and to be able to work with you. Thank you.
Thank you very much. Feelings mutual.
Director Chopra, it's great to see you. You know how I feel as a former Attorney General. The work that you do is just so important, and that partnership with the AGs across the country, like you said, is key to really address some of the consumer challenges that we are seeing. Every time there is a law that is passed, usually there's some predatory actor trying to figure out another way to take advantage, and so we have to stay diligent and be on top of all of these issues. One of them that has been important to me, and Jack Reed has talked a little bit about this, is our service members and their families. I know in 2021, our service members and their families submitted more than 42,000 complaints to the Consumer Bureau. The most common type of complaint, more than 60%, were about credit reporting and debt collection. I know also that service members have complained to the Bureau about billing inaccuracies, and that debt collectors use aggressive tactics to recover allegedly unpaid medical bills. So how has the Bureau protected service members and their families from unfair practices? Can you talk about what you're trying to do to address this?
Yeah, so we've actually taken a number of enforcement actions on the Military Lending Act. Last week, we released a report about the Service Member Civil Relief Act, which provides important protections. Let me just say more broadly, though, the impact of the credit report for a service member, it's different than for civilians, because when they're moving a lot or when there's certain life events, they need to be able to rely on that, sometimes even for security clearances. So credit reporting issues are really tough.
Or continuation in the military.
That's right.
I mean, this is such an important thing, and this is what I hear from our servicemen and women in the state of Nevada.
And one of the things that I worry too is they're more likely to be victims of identity theft.
Mm-hmm.
So the issue of service member data and privacy and their credit reports, I think, is going to continue to be a top issue. I know this is also a place where the Federal Trade Commission has put in work, and they have authorities, and we're going to continue to work with them. The DOD has been a very good partner in figuring out other indicia of military family readiness.
Mm-hmm.
And so there's more work which we can brief you on about.
Please do. I look forward to it, because I know Jack talked about, and you addressed the Civil Relief Act, and the concern that our active duty, particularly our Reserve and National Guard, are paying an extra $9 million in interest every year. And so I appreciate your work in addressing it. Let me jump back to just in general credit reporting. For years, the top complaint from consumers in general, and this is even when I was Attorney General, has been inaccurate credit reports. And thanks to the Bureau's efforts, we are seeing some improvements with getting real and timely responses to the complaints. Can you talk about that progress that the Consumer Bureau has had with improving responsiveness from some of these credit reporting companies, but also what else do we need to be doing, and what can Congress do to address this issue?
I think that the three credit reporting conglomerates obviously don't face the same competitive constraints that a normal business does. Mm-hmm. Consumers are not their customer often. So consumers are the product. Mm-hmm. And I think that's a fundamental market failure that requires us to make sure that they are taking accuracy and disputes seriously. It is clear that for some of them, they are willing to pay the occasional fine or class action lawsuit. But ultimately, there is a serious issue when it comes to their incentives. I want to share that I also worry about the new generation of data brokers and background screeners that are even collecting data on small businesses, collecting data on others. We need to make sure that those secret dossiers that individuals have rights to make sure they are accurate and they can dispute wrong issues.
I do too. And I will just say, as a former Attorney General dealing with the subprime mortgage crisis, I can't tell you how many homeowners are even heard from that they were trying to work with the credit reporting company and they were being punitive against them. It's an area that we really have to focus on.
And that lingers with people for so long. Mm-hmm. And often if one of your three reports has problems, you're shut out.
That's right. It is devastating. So thank you again. Thank you for the work. I look forward to continuing that work with you and the Bureau and your incredible staff.
Thanks, Senator Cortez Masto. Senator Ossoff from Georgia is online from his office.
Thank you, Mr. Chairman, and thank you, Director Chopra, for your service and your testimony here today. Building on what Senator Cortez Masto was just discussing in terms of the impact that adverse credit reports can have on Americans, let's talk about how this can impact veterans and what you can do, Director Chopra, to protect veterans from improper billing and collections from providers of community care services referred by the VA. You published the Office of Service Member Affairs 2022 annual report. It noted that you receive many complaints from veterans who incur medical debt as a result of a community care healthcare provider that is a third-party provider to whom the veteran is referred by the VA for some outpatient services, who trust that those community care providers will bill the VA, but instead they bill the veteran improperly. Then it gets referred for collections. And then suddenly this veteran has collectors coming after them, maybe an adverse credit reporting event. The report that you issued, Director Chopra, recommended that medical providers and third-party billing companies should have adequate systems in place to serve veterans. Of course, they should. What else can you do with the powers at your disposal to protect veterans who are at risk of becoming trapped by medical debt, having adverse credit reports because of the failures of these healthcare providers to properly bill the VA?
Well, let me just say that credit reports should not be a tool to extort money out of someone who doesn't really owe it. And I think for many veterans and frankly many Americans, they end up just paying it because it's such a headache. We've already taken a few steps. One, we've put some focus on nursing home debt collection. This is a place where we want to make sure that debt collectors who are collecting on nursing home debt know that's when there might be indicia that those debts are invalid. This issue of outpatient referrals from the VA, we're really pleased to work with the VA on how they are dealing with credit reporting. They have updated some of their rules about when medical debts will be reported. It will drastically reduce the number that are reported, because ultimately, I think we don't want to penalize veterans for getting medical care for which the law entitles them to receive as benefits of their service. So, Senator Ossoff, I think there's other places in credit reporting and debt collection that we continue to find concrete solutions to address these issues.
I appreciate that, Director Chopra. Let's talk about new mothers and the costs of pregnancy and childbirth. The University of Michigan study published last year found 24% of pregnant and postpartum women report unmet health care needs due to cost. 1 in 5 parents receive an unexpected charge averaging $744 on their hospital bill following childbirth. That's on top of $4,500 in out-of-pocket spending on average that each woman spends on care from 12 months before to 3 months after delivery. We know, and we've been discussing the impact that medical debt can have on families. We're talking about families with new children. How do you address the impact that this can have on pregnant women and new mothers, and what more can you do to protect them?
I think that there is big concerns about how big medical events can often trigger personal bankruptcy. It's a financial distress is often an underpinning is often financial issue, often medical issues. And I think the last thing we would want is to see that, pregnancy and new mothers having to deal with mistaken credit reporting, surprise billing. Of course, the CFPB's role is really on credit reporting, debt collection. But of course, and we're happy to brief you further on the work with the Department of Health and Human Services, the work we do with others to address this really complex and convoluted system of medical billing and how it is becoming the #1 collection item over time on individuals' credit reports.
Dr. Chopra, thank you. And I think that these issues faced by veterans and new mothers speak to the essential role that the agency plays in protecting consumers. My final question, is about service members who, for example, are undergoing security clearance investigations. Your Office of Service Member Affairs report found that in 2021, credit reporting companies were, quote, not responsive to service members' requests for investigations, jeopardizing their security clearances, job security, and promotion eligibility. They're not getting timely responses from these credit reporting companies when, for our military service members, their jobs and clearances on the line. What more can your agency do to ensure that credit reporting companies respond in an efficient and effective manner to these service members' requests and when service members bring complaints to you?
Well, we've certainly seen a bit of an uptick in their responsiveness, but ultimately we're going to have to assess them for legal compliance too. They have requirements to assure maximum possible accuracy using reasonable procedures, and I think that's a place where we're very, very focused on whether they're meeting their legal obligations on dispute and accuracy. So, of course, their compliance with the law has huge ripple effects on all segments of the population across the country, and so we'll continue to do work when it comes to the Fair Credit Reporting Act, including exploring potential rules.
Thank you. And Mr. Chairman, I know my time's up. I'll just say this, Director Chopra, the Congress authorized your agency to undertake these activities explicitly in statute, precisely so that you could protect consumers such as we've discussed today. Thank you for your testimony.
Thank you, Senator Ossoff. We'll close. Senator Toomey has some parting words.
I'll be brief, Mr. Chairman. Thank you very much. I just want to remind my colleagues the legislation that Senator Haggard and I have proposed does two things: would change the governance of the CFPB to a bipartisan commission, and it would change the funding of the CFPB to funding through appropriations. This in no way would end the CFPB. It would in no way prevent the CFPB from carrying out its mission. But what it would do is it would restore much more accountability than we have today. The Constitution is so unambiguously clear that all legislative powers are to be vested in the Congress. We hand over powers to write rules which have the force of law to the CFPB. That is a legislative power. It really only makes sense that we actually exercise some control over this body to which we have delegated our own responsibility. So I'd urge my colleagues to consider supporting our legislation. I thank you, Mr. Chairman.
Chairman Brown, can I just offer one thing? I too
Very briefly.
did not get to do this, but I also want to thank Senator Toomey over the past few years. Congratulations on finishing your service and returning to Pennsylvania or wherever you may go, and also to Senator Shelby, who over the past decade have had the chance to work with him and his staff on so many things. And you know, many years ago, he was very clairvoyant about data and data privacy. And so I again want to thank him too for all his work.
Thank you.
Thank you for those kind words, Director. A moment about accountability, then I will adjourn. The CFPB director can be fired by the president. We know that. The director is confirmed by this body. The CFPB submits quarterly financial financial reports to OMB. CFPB's operations and budgets are subject to a private sector independent audit. It's subject to numerous additional audits by the Office of the Inspector General and GAO. It's the only independent banking regulator with a cap on its funding. It annually audits the financial transactions the GAO does of the CFPB, and the director appears, as you know, painfully or not, in front of this committee twice a year. These are just some of the accountability measures the CFPB complies with. It's clearly accountable. It's not really the objection here. It's the fact that CFPB is such an effective watchdog for consumers to the detriment of Wall Street. That's why the CFPB is under attack. Thank you, Director, for being here today. Senators who wish to submit questions, those questions are due 1 week from today on Thursday, December 22nd. Director, please submit your responses to questions for the record within 45 days when you receive them. And as I adjourn, again, thanks to Senator Toomey, it's our 88th or 87th hearing together, and I appreciate his public service and his attention to detail and his good intellectual and principled insight. And I learned from him on all kinds of issues. So, Pat, thank you. Director, thank you. The committee's adjourned.